tech stocks and the FANG stocks, and including Tesla in that, may have gotten a bit extended. And I think the realization has come around now that there's only so much upside that those places can go, and yet there's some real value elsewhere in the market. So what we're hoping to see now is some rotation into some other sectors. I think that we have some profit taking, which makes sense. I mean, for example, considering the NASDAQ went up to like 165, if you were long from lower levels, generally it's smart to take some profit when you get into a parabolic move like that. That it turned on a dime was where the spook factor came in. Is it concern about COVID? There's always going to be concern about it, but right now, as we talked about, I think a couple of weeks ago, is the death rate is really going to be the most important thing. And now we're sort of 2 weeks into this surge, and we're not seeing a real elevation of the death rate, which is why the market sort of has come back today. Now we're into bank earnings, and in some ways, the tech, and particularly the dependence on tech for stay-at-home world, if that actually diminishes, it may turn out to be pretty good news for the overall economy, which really, in order for us to sustain any economic growth, it can't be so concentrated in just technology. We still need manufacturing. We still need to be able to build. We still need to be able to provide jobs. We still need people to work in all of the different manufacturing sectors of the economy. That's what's going to keep the United States okay in terms of gross domestic product. Tech alone is fun. It's sexy to trade, but it's not the real economy. It's only a fraction. So Wells Fargo has had a lot of issues even before the COVID, one of which is that they were making bad loans, they were cheating on things, they were charging very high fees. They have not had good press. And then recently, when we've had the stress tests, Wells Fargo was the only bank that the Fed pointed out had to actually reduce their dividends. So when their earnings came out really poor and their dividends went down to 10 cents, that's not a huge surprise because they're not an investment arm bank. They're really going to be dealing with a lot of loan delinquencies, which a lot of the other banks are dealing with too. You take a bank like JP Morgan, and there's more of an investment arm there, which actually has increased, and that's why their profit beat. So now we're going to go forward, right? We've got a lot of banks left to report, and so we're going to see what happens with Citicorp, Morgan Stanley, with Goldman Sachs, and Bank of America. And I'm pretty optimistic that anything that has to do with investment will be good. And also another interesting surprise, by the way, with JP Morgan was that their auto loan part had gone up a lot. So people are taking out money to buy cars, which is sort of interesting. Whether they default on their loans, that remains to be seen. When you think about the high flyers, you're thinking about the very large cap FANG stocks like Apple, Amazon, Google, Netflix, and of course we have to add Tesla in there as well. And I would totally agree that probably the risk to the downside far outweighs the potential upside. But that doesn't mean that you couldn't look at other stocks that have done very well, that are near 52-week highs, but aren't in the large cap, but rather the small cap growth stocks. And we've talked a lot about that through the last several months. So you're looking at things like Zebra Technology or HubSpot, or even VBK, which is an ETF. They have done well, and they're trading near their yearly highs, but they're small cap stocks in tech, but with really good balance sheets. So that's kind of where we're telling our clients to look. Right now, I would say that gold looks pretty good. It's sitting around that 1800 level, and I don't see any reason why, unless all of a sudden the rates started going up, which isn't going to happen for a while, or the dollar starts screaming to the upside and it's actually been weak. I don't see any reason why it shouldn't continue to go up. Yeah, we added actually even some more. We're very heavily long gold for all of our clients. Well, the miners have done well. The problem with the miners is that they're not going to handle the shock if the market turns lower because they're stock related. Gold is really a pure play on gold and gold companies. Silver, though, is also interesting because it's kind of double-edged. There's an industrial usage, but there's also a hedge against any type of inflation or strife. So we're looking at silver, and we're in silver, but we're not adding yet to the silver because we think that we want to see a little bit more of talk on inflation. And today, the consumer price index came out and actually showed an uptick, which means slightly inflationary. And that's the other thing we've talked about is stagflation. So that's really where you want to start looking at the miners, the silver, and gold. But gold is going to go up regardless, unless the whole world all of a sudden breaks out into peace and there's no more virus and the world just gets into happiness. Then the gold will go down. And wouldn't that be nice? But that's not going to happen so fast. Well, there's a couple of things that I'm looking at. Oh, actually three, if you really wanted to break it down. One is the retail, and not necessarily the e-commerce retail, but some of the more brick and mortar retail. Part of the XRT ETF is department stores and auto parts and other types of restaurants and things like that. If we're looking forward and a vaccine starts coming out or the death rate doesn't go back up and we start to see talk of the economy opening up more as we get into the fall, I think that's a very undervalued play, is in the retail. And there's a few stocks in that we can talk about in future weeks. Number two is the banking sector itself, particularly the investment banks, because they're allowed now with the Volcker rule rolling back to invest money in actual stocks. And the third, you're going to be a little surprised for this, but actually, believe it or not, cannabis looks like it's bottoming out. There's been a lot of talk about what's going to happen with the next election. Will it be legal? But even if it isn't legal, it's still very much legal medically in many states in the United States, and recreationally less, but still also increasing. That's been beaten to a pulp, and that potentially could be a good investment opportunity and one that you could actually hold on to.